Hey guys, Bix Weir, roaddoor.com. I got Andy Schectman on the phone, on the line, on the video from Florida. I think you're in Florida. How's life in Florida, Andy?
It's fantastic, Bix. It's fantastic. I watched Minnesota narrowly vote down the defunding the police. Still 45% of my old home state actually thinks it would be wise to defund the police after what's happened there and rise of criminal activity. It's shocking to me. It was a wonderful place to grow up, a wonderful place to be from. I have nothing but great memories of it, except with the exception of the last year that I was there. And let's just say it's great to be here in Florida.
Yeah. Well, truthfully, I don't trust that any votes are real anymore anyway. So who knows what the real story is with all the fake voting and all that.
I was sure I was going to wake up this morning to find 1 million votes cast for the Democratic governor in Virginia. I was amazed to see that he actually won. So, maybe it's a token.
the insanity of everything that's going on, obviously, is the world has been ripped sideways. You moved recently. I moved recently. I moved up to even farther north from Oakland in California, and I love it. It's a breath of fresh air. But on the flip side, I have to find new doctors and new dentists and all that. And I'm looking I got this issue with my hand. I was chopping down a tree and screwed up my hand. What am I doing outside? But screwed up my hand. And so I'm calling the hand specialist doctors and all that in my insurance thing. And I get the first guy I called was like the number one guy in the area. And I'm talking to the lady and she goes, okay, you'll need to show your proof of vaccine when you come in. And I said, wait a minute, you have to be vaccinated for this doctor to see you? And she says, oh yes, all our patients have to be vaccinated to walk through the door. And I said, well, are all the employees vaccinated? And she said, yes, all the employees are vaccinated. I said, what are you worried about if you're all vaccinated? And number two, is it ethical? It may be legal, I don't know. But is it ethical for a doctor to refuse to see a patient that is unvaccinated?
Of course not.
I know.
And look at all the emergency services that are shut down in New York City right now, because de Blasio passed that law or that mandate that if you're not vaccinated, you have half of the fire stations in New York City that are inoperable right now. And it's craziness, Bix. It's absolutely crazy on so many levels. That in particular, the prospect of 90 million people losing their jobs. How about the fact that half of the TSA agents are not vaccinated, and the week before Thanksgiving is the drop dead date. If they do not get vaccinated, they're out. So right before everyone gets on a plane to go visit family, you're going to have lines out the door because TSA is going to be a mess.
It's like you can't make this stuff up. If you wanted to take a monkey wrench and throw it into society so that everything gets ripped apart and sideways, they're doing that. And they're doing it on purpose. I believe that
they are.
Obvious it's on purpose. But let's get back to, I read something this morning that came out actually a week and a half ago. And I know you hadn't heard about it because I just talked to you. The CFTC awarded the largest award for a whistleblower in their history. I think this is the first award that they've even announced, not sure, but it was $200 million to a single person for turning in someone who was breaking the law. Now, let me read the official CFTC statement so that we are on the same page. And I don't know how much, maybe I was just out of town at the time because I was in Texas for a little bit. But this is from the CFTC website released on October 21st. Commodities Futures Trading Commission today announced an award of nearly $200 million to a whistleblower whose specific, credible, and timely original information significantly contributed to an already open investigation and led to a successful enforcement action, as well as to the success of two related actions by a U.S. federal regulator. We all know who it is. There's only one fine that has been fined even close to this amount in the past, I think ever, and that was the JP Morgan fine of $920 million for the rigging of both I think it was I know the metals, but it was also the U.S. bonds. So they were rigging metals and U.S. bonds, and this whistleblower got $200 million. Now, to put this in context, the information in that lawsuit was all those crimes were committed between 2000 and I think it was 2008 and 2014. At that time, there was ongoing CFTC investigations, which the CFTC points out. Here's my problem. The CFTC has a budget of over $120 million every year. How could they not see the manipulation, see the collusion of JP Morgan while they were sitting on the trading desks? They're literally in the office investigating, and these criminal transactions were going on. And then just to add insult to injury, they couldn't do their job. They had to get the FBI to do their job, and they had to get someone from the inside. The FBI got someone from the inside to tell the CFTC regulators what manipulation was and how they were doing it. The whole thing stinks. And I'm questioning why we have a CFTC at all if we have to outsource their job because they're too incompetent to do it.
Look, I mean, I agree with everything you said. I can point to two examples. Now, these two examples just resonate in my brain because of the craziness of the actual events. But in reality, if you look at some of the work Dimitri Speck has done, brilliant chartists showing how the AM and the PM fixed its waterfall declines over a period of 10 years, where he would take all of the information, all of the trading over a 10-year period and jam it into one chart and show basically the way that if you took all of the numbers, put into one chart, here's what it looks like. And, you know, you don't have to go any further and wonder where the hell are the regulators. If we look at the silver squeeze time frame, February 1st and 2nd, you have more silver going into the SLV trust than ever before. You had $30 an ounce silver. You had all of the companies online, myself included, shutting down that weekend because the demand was immeasurable. This was the weekend where on a Friday night, the market goes to sleep. Here on the East Coast, I believe it's 5 o'clock or 6 o'clock PM, it goes to sleep, and then it sleeps until Sunday at 6 PM when it opens back up. That's the only time that the market sleeps weekly. So it's 24/7. It's trading around the globe, except from Friday night to Sunday night. And usually at that time, my head trader will call me and say, you know, you have an interview with Bix, or do you have an interview where we need to actually increase our exposure into the weekend? And we do that by buying long contracts. Our inventory is fully hedged, right? So for what we have in the warehouse, we sell short on paper. This is what the COMEX was originally designed for, to offset risk. We're not speculating at all. If I have 1,000 ounces of gold in physical, I'll sell 1,000 ounces on paper, because if it falls in price on my physical, it goes up commensurate on what I sold short. This is what the COMEX was used for, to offset risk, right? So if everything is hedged when the market closes on Friday night, I can't take new orders without being exposed. So what he'll typically say to me is, you have interviews, anything I need to know about, how much should I buy into the weekend? So that weekend we chose to buy 55,000 ounces of silver, 11 futures contracts. And by Saturday morning, he called me and said, you've sold 90,000 ounces. You're already 35,000 naked exposed to the market on Sunday night. This is when the price is flying and the phones are calling at 2 a.m. We're getting phone calls. So I said, shut it down. Like every other online company, there's so much demand that every company in America shuts we're done. We're done until Monday when the market opens, or Sunday night. We'll open back up when we can re-hedge our exposure. When the market popped up $1.50, it cost me $42,000. This is the kind of risk that was involved. People were talking about it gapping up $10, which would have cost me $420,000, would have been a big problem. Anyways, I digress. The point I'm getting at is that in this environment where the demand was flying, more money going into SLV than ever before, at 4:30 in the morning, someone dumps 1.5 billion ounces of silver, bang, onto the market, drive the price down. No one in their right mind would ever do this. This trader would be shot and fired, and in that order. And, where are the regulators who say, who the hell would be stupid enough to dump it all onto the market when there's so much demand out there? It's insanity. And yet it drove the price down to $26. No one questions that. We saw the same thing in gold on August 10th or 9th or 10th, when in the middle of the night, somebody sold 2 million ounces of gold in the middle of the night when London had closed before New York had opened. It's called the access market, the exact same time that someone did it on the silver squeeze, dumping so much metal instead of bleeding it out over days or weeks to maximize the return. In essence, you dump it, guaranteeing the worst possible execution, and gold fell by $100. Now, I know we normally don't talk about gold when we're together on your show, and
I don't have a problem with gold.
Look, in large part, I agree with you and everything you say about silver. To me, it is the value of a generation. But I just want to make a point as it pertains to gold and what the biggest money in the world is doing. When the price of gold fell by $100 that evening, someone, aside from the commercial banks covering a whole bunch of gold and silver that were stale, silver went down to 22, gold fell by $100. The commercial banks covered their old stale shorts. One trader, Bixie, one trader bought 38,000 December gold contracts. And it's in this others category that we've all been talking about on COMEX, this third group of reportables that has shown up on the Commitment of Traders report, these managed money traders that are thought to be sovereign wealth funds. One guy or gal buys 38,000 contracts. You're talking 3.8 million ounces of gold that will still stand for delivery, or she, at the end of November into December, if they follow suit to what they've been doing the last 2 years. That's an initial margin requirement of almost $350 million. That's $7.5 billion worth of gold. So what I'm getting at is, why are the regulators not paying attention? Well, maybe it's because it's their friends or their buddies who have that kind of money, or maybe they're just dead, or maybe they're just stupid. But the point of it is that there's no one in their right mind, nobody, that would dump 1.5 billion ounces of silver worth $45 billion after London closed before New York opened in the greatest bull market of ever. You would bleed it out over days. Or no one in their right mind that would dump 2 million ounces of gold. Same thing when the market's asleep. What I'm getting at is that these questions, where the hell are the regulators? I mean, it's exasperating. And I would like to know who the heck was the person that got the $200 million. I'm sure it would probably make us mad to find out who that person was too.
Absolutely. And just so everybody knows, when Andy says dumped, they don't actually have the metal. They dump derivative contracts on the COMEX.
Right.
Yeah, I mean, the thought of it had to be an insider. As a matter of fact, when you say, where are these CFTC regulators? There's only 2 left. The commission's supposed to have 5, and there's only 2 left, and they have not been refilled. This is the first time in history that we've been stuck with just 2 regulators when at all times it's supposed to have 5.
Well, and the IRS is hiring 40,000 new auditors, so it's a good thing that they have their priorities in line.
Yeah, but going back to another release was made by the other. So there's Rustam Benham, who is he's the acting chairman of the CFTC. We've heard about him. Chris Marcus has done a great expose on him, tamping down the silver price. The other commissioner is a woman named Dawn DeBerry Stump. Now, Dawn DeBerry Stump released another, when this award was announced, she released an opposition statement about this reward, saying, but she gave away the ghost. She was trying to say the foreign entities involved, the foreign regulators involved with this should have negated the 200 million or something to that effect. Basically, she talked about the inside trading that was going on that was discovered by the foreign regulator. I think it was someone out of the JP Morgan London office who was the whistleblower. And then she's pissed off because that whistleblower is getting the $200 million that they're siphoning out of JP Morgan. Anybody out there who's got the time and energy to track that one down, read the Dawn DeBerry Stump statement. And it gives away a lot. I don't think she wanted to give away so much. I mean, it could have been anybody. It could have been an auditor within one of the companies, because it wasn't just JP Morgan. There was 4 banks involved in this scheme. JP Morgan just paid the largest amount.
Yeah, well, JP Morgan paid the largest amount. They paid 920. Their trading desk, the metals desk that year, made $1 billion. They walk away 80 million plus and throw 2 traders under the bus. And instead of it really going up to the upper levels of management, who obviously knew what was going on and acquiesced to it, those traders make the assertion that they were trained how to do this, and yet they're the ones who get thrown under the bus. JP Morgan laughs all the way to the bank, still making net 80 million on the desk for that year and $1 billion a month for their company. It's really too bad that we have to even have these conversations. But one of the things, Bixie, that gives me hope, aside from the great work that you do that constantly revitalizes me and lets me know that this won't go on forever, is the fact that you're seeing the biggest money in the world drain COMEX at the same time they're holding the price down. I haven't looked at the numbers. Do you know? I know last year was about 300 million that was taken off of COMEX in ounces of silver. Do you know where we are right now? Last I checked, it was over 200 million. Do you know what those numbers are at this point?
The COMEX inventories.
What has been delivered off of COMEX this year?
Well, I think the deliveries, the problem is it goes in, comes in, goes out. Ted Butler's outlined this so many times. He said there's never been a commodity in the world that has so much turn of metal coming in and going out, coming in and going out. We all know it. At one point in the past, I think it was Morgan Stanley got busted for doing that. Shipping the silver out one part of their facility and shipping it, turning the corner, shipping it back right back in the other type of thing. That could be what's going on. It's got to be. I mean, the amount of physical silver that churns in the COMEX market is unbelievable. But I think the real delivery mechanism now, because there's so many eyes on the COMEX, is SLV. And SLV, you can take delivery. If you have 5,000 shares of SLV, you have the ability to take delivery. And it is an arduous process. The banks will fight you all the way, but it's part of the SLV package. A company called Private Advisor Group LLC did just that when you saw that, that weekend. They bought close to 200 million shares of SLV. At one point, they owned 1/3 of all SLV shares, and they bought it within the same quarter. So they had 0 to start the year in January. So if you're looking for someone who was literally going after physical, that was it. And it's a group called Private Advisors Group LLC. They have limited reporting requirements, and it's an upstanding company. If you're talking about sovereign wealth funds and the big money, they would go through a company like this. So I think you're spot on there.
Well, to your point, I talk a lot lately about this big gold whale. And to your point, they are watching silver on COMEX, obviously. And I saw that last week, there was almost 3 million ounces that were withdrawn out of SLV. So it's Ted Butler thinks that it's one large investor that continues to buy shares of SLV and converting those shares into physical metal so as to legally avoid the share reporting requirements that come off of that would be evident. In other words, they're doing it that way so that they can continue to drain the large pools of silver without having their identity known. So who is that one large trader? Don't know. But that's what I mean about taking comfort in the respect that the action is very counterintuitive. And for the new people who come into this market, they're not used to what we've had to deal with for decades, this counterintuitive, this maddening type of price action. But when you see this kind of money taking millions of ounces, hiding their identity, pulling it off in a very clandestine way, the biggest money in the world is repositioning, and they're trying to run cover. So that's where I find peace in my mind when I try to close my eyes at night, knowing that we, the little people, are not being fed the truth. We're seeing little crumbs of it. But when you see the biggest money in the world go to such great lengths to, whether it be post a $350 million margin account to control $7 billion worth of gold, or to pull money off of the silver ETFs. And the only ones who can do that are the really, really, really wealthy people who have enough money to buy a basket of goods or be an authorized participant. It's illuminating because the big money is always closer to the information spigot. They're being told what to do or being they're privy to information. And why else would they be doing what they're doing in such a clandestine manner if it weren't really important to what's coming down the pike? So for what it's worth, I agree with everything that you're saying. And but to me, where I am able to sleep well at night, even irrespective of the maddening price action, is what this big money is doing. And I think people should take a look at that and say, hey, if the biggest, most sophisticated, well-informed money in the world is going to such great lengths to acquire such huge amounts, then it doesn't matter what the price is doing today. In fact, it's a gift, it's a subsidy when you're still able to buy silver. And look, it's easy for me to say that. You have to try to find something positive to say when you see, again, at the heels of the FOMC meeting, that they knock it down again. But they're knocking it down because it's important, and it's important to maintain an illusion of dollar supremacy when we are in the bottom of the ninth inning towards the, of the dollar's reign as the singular world reserve currency. So, you keep plugging away.
I agree. And let's talk about today. They slammed the price of silver down near $23. It was significant for the moving average. 50-day moving average was at 23.40. So basically, now it's below the 100-day, the 200-day, and the 50-day moving average. All the tech funds are going, yeah, it's short. Once they cross moving averages, they're required by their programs. It's already programmed in. They just blindly short, because that's the way they play the game. When it breaks moving averages, they run after it. So this is when the big commercials, JP Morgan and friends, short or cover their shorts when the tech funds. It's been going. Ted Butler does a great job describing it. It's how they keep the price of silver in a band, and if they have to slam it down to negative $40 like they did to gold, they do that on occasion too. Because remember, we're not dealing in real physical silver. We're not dealing in real physical gold. We're dealing in derivative contracts and a criminal exchange called the COMEX and owned by the CME that has they are a self-regulating entity. So they self-regulate, which is the worst thing you could do. It's like going into prison and telling a criminal you're going to be self-regulating on your behavior from now on. You're giving the banks, which are the big participants in the COMEX, the ability to self-regulate. It's insane. Yes, there's the CFTC, but clearly they can't do anything and refuse to do anything, if not help and assist in the manipulation.
To your point, real quick, as I mentioned, that August 9th slam down in gold and silver, gold was sitting on the 200-day moving average the night they hit it, and they hit it down with momentum. And these moving averages in technical parlance are the delineation between bull trend and bear trend, especially when coupled with momentum. So by the time the traders got into their desks in New York, the long hedge funds who were positioned in gold, they were traded out. The algorithms that control it said, bang, sell it, just went through the 200-day, and it pushed gold down $100, pushed silver down $2. That's exactly right. But where I take comfort in is what happened once the price went down. The banks covered, and one big trader buys 38,000 contracts. So the biggest money in the world is using the manipulation of paper to accumulate physical gold and silver, and they're leaving a footprint. That to me is where I take comfort, knowing that if they were just selling and moving into a different direction, I would have less comfort. But when you see what they're doing, somehow the world is asleep at the switch, allowing this to happen. And if I were a very, very wealthy man like a Bill Gates, why not just take $1 billion? Now, not quite. Why don't you take $1 billion and just buy it all up? Why not? And I'm surprised it hasn't happened.
Well, I've talked about this, and it's, if you're that wealthy, the vast majority of your wealth is in the confidence in the system. They don't want to take out gold and silver, which would destroy confidence, take out some too big to fail banks, start a chain reaction that would destroy all his other wealth.
Cutting off your nose to spite your face.
Yeah. I mean, and as an insurance investment, there's nothing better than gold and silver, physical gold and silver in your own possession. Let's tell people, now that they slammed the price down, we know it's below both moving averages. I think we're bottoming in this. There'll be a run up, and then will it hit $30? I think it will by the end of the year. And then after that, it's kind of free sailing to 50. And then after that, it's free sailing to, I don't know, 1,000, 2,000, 3,000, whatever your mind wants to envision a freely traded silver market at. Andy, how can people get silver in their own possession right now, today?
So I'd like everyone to send me an email at info@Miles Franklin, and put Bix sent me or Road to Ruta. I will promise your listeners the best price in the United States on silver. I will move heaven and earth to do that. I've pretty much been able to do that for your listeners now for 2 years, and I will continue to do that. Either myself or one of my brokers who I have personally trained, they all know how important it is to give your listeners the very, very, very best deal on whatever it is they want. You know, you've often talked about junk silver. Junk silver to me is very emblematic of this market, where they say there's no bull market like a metals bull market, which is identified by fear. Now, I did just get a whole bunch of bags, close to 90 of them. And it was one of the more difficult transactions. I mean, I've been trying for months and months and months to buy these from one group, and no one's selling us anything, Bix. Everything is 2021. We see nothing in the way of secondary market. No one wants to go back into fiat. Even if the price isn't behaving, no one's even capitulating. They realize the importance of holding silver. Junk silver we have, but for the first time in 31 years, Bix, it's $2 to $3 more an ounce than a coin like a South African Krugerrand, or a UK Britannia, or an Austrian Philharmonic, or an Australian Kangaroo. The US Eagle, I'm a US Mint distributor, one of only 27 authorized resellers in the world. I have 60 or 70,000 Eagles in stock. There are a lot of reasons to own them. A lot of people think it is the best way to own silver. You're going to pay almost $5 an ounce more, and I will be the least expensive in the United States. So give us a call. We'll explain to you what's happening with the market, why certain things are higher. Is it worth it? The historical comparison between those items and others. But I will promise you, Bix, that your listeners will get the best price in the country, personal attention. That's info@Miles Franklin. You have our word. One last piece, and then I'll let you run. Our new website is really getting close to being completed. It was a much bigger undertaking than I had thought. We are still old school. And there's a part of me that really believes metals belong old school. Metals belong in a digital world. They kind of still, to me, should be analog. So I know it's not as convenient as hitting click, but you're going to get personal attention, the best price in the country, and we'll make it worth your listeners' while to give us a call. And I can't tell you how much I appreciate the trust. I will personally make sure that these things go the way they are supposed to. Not to say we haven't made a mistake once in a while, but if we do, I'll make sure we make good on it. And that will be the exception, not the rule. And just a great amount of appreciation for trusting your listeners who follow you to the end of the earth with our services. And I take that, we all take that very seriously at Miles Franklin.
Well, thank you, Andy. And it's been a wonderful relationship between our two companies, and especially all the people that will benefit from this situation that we've set up. And I love it. And I've known you for a hell of a long time. We're all both on the same side, and our goal in life is to get silver into the hands of the people. Andy Schectman, Miles Franklin, if you want to place an order, info@milesfranklin.com. Thank you, Andy, and hopefully we'll see you next week. How about that?
I look forward to it anytime. You call me with a 5-minute notice and I'll jump on, buddy.
Sounds good. Talk to you later.
All the best. Stay well, Bixie.